Alrighty. Hello everyone. This is first video on this channel. What day is it today? May 26th, 2026. If you didn't read the description of this channel, I day trade. Well, I'm about to get my first my first eval in August, but for the last 2 months I've been like, I don't know how to explain it. I'll show you in trades, but all I can say is I've been on a 13-3 stat in my trades. So I've gone about 13 wins and 3 losses over, I think, 15 days. There was more, but I only logged about 15. I started logging the last 15 trades. So I'll show you how I trade and stuff like that, but I just want to do an introduction to the channel because I'm gonna have this channel for years. Like, I'm going to college and stuff, but I'm doing this on the side, and I want to be like, I want to be rich, like I want to be rich. So and I'm not doing trading because I think it's a fast way to get to being rich and wealthy and stuff like that. That's not what I'm doing it. It's fun for me. Like my brain is just patterns, and I see it in trading, so I feel like it's just a 1-to-1 combo. As you can see over here, I trade the S&P, and I don't trade the NQ, but I watch it because they move together, and um, it's just helpful because sometimes stuff happen on NQ that doesn't happen on ES, but it causes ES to move, So I'm doing that. I just want to let everybody know that's watching that this like, it's all in my description. Like, this channel isn't supposed to be some, like, TJR or any of those. Like, this is just like me logging my trades and explaining them, and it's a place for learning, a place for progressing, and just overall, like, locked in, like, just do what you want, like that's the vibe. um it's chill. It's a chill spot. Like, I'm just gonna be sharing trades. I'm gonna explain my trades. I'm gonna explain what went wrong, and I'm not gonna sit here and act like I'm the greatest trader in the world, because I'm not. Like, I've been only trading for a year through paper trading, and I'm gonna show you the thing I'm doing right now, and I don't recommend what I'm doing because it takes a lot of discipline. So if you don't have your discipline in check, then you kind of can't do it. But yeah, I'll show you that. But anyways, I was saying, it's just it's a place to trade with me or without me. It's a place to watch my failures and like, connect them with your failures. Or if I'm winning, you can connect your wins with mine and be like, okay, I'm doing something right, or we're progressing. It's not just me. It's like, okay, I got somebody else that failed where I failed. So you know it's just a chill space. And I'm this is my first video, so if I'm stuttering so much, it's because I don't know what to say. Like, but you know what? I think the introduction of this channel isn't going to be me telling you what the channel's about. I think it's what it's going to be like known as, or what it's going to become. That's going to be an introduction. So let's move to today. This is today's trade. I took this at school. It looks fucking messy. Like I'm gonna be honest. Like me looking at this, if a beginner looked at this, it'd be like, "What the fuck are you? What are you showing me? This is Science Rocket or some shit, bro." But no, I'll explain everything. So this was today at market open. I am on delayed because I'm not on an actual like live account, and you might be wondering how are you trading? Like how are you doing that? Basically, what I do is, hold up, I'll show you something. So say this is market open, all right, like right here, and the rest is just the market. But on market open, you don't see any of this. I'm just seeing like normal candles like everyone else. So what I do is, like, I'm over here, and I mark out the stuff in my strategy, and um like I can show you, like say I see my setup right here. What I would do is, and this is the part that takes discipline, is I would place my entry right there, exactly where I would take it if I was trading. Um, like on an actual live account or funded, like I would place it exactly where I would place it if I was actually trading. The reason I say don't do this and don't, because this is simulating trading. Like, this is not even paper trading, because I can't do paper trading. I'm on delayed time. I'm like 10 minutes delayed. So even if I like add orders, um, it's not gonna get filled. Like, it's gonna get filled. Like, for example, you're not gonna see any of this. You're gonna be like on here on delay time, and then you place your order, and you're basically placing it up here. Like, it doesn't make any sense. So, if you have discipline and don't, cheat your outcomes, like wherever you think you would place it, or whenever you see your setup and you would place it, keep it there. Like, even if it's like a loss, just because you can move this up and down, it doesn't mean you should. Like, that's what trains your brain to be like, okay, I have the ability to stop like my loss, but I'm not going to, because it's not real. And even if it was real, like, it trains your brain to be like, okay, you have the ability to cheat it, but you're not going to, because you're staying true to your strategy and practice. You're not trying to chase the win. That's basically the main thing. So, anyways, um, that's kind of what I do until I get my eval in August. So, one thing you need to know, like, I'm gonna explain everything on my screen. These white dotted lines, vertical lines, my strategy has specific time windows of where my setup pulls out. You might see this on ICT, but um, I usually have a line for 9:30, which is market open. I have a vertical line for 10 a.m. and then I have another vertical line for 11 a.m. And 10 to 11 a.m. is where usually my A plus setups show up. And I have a line for 12:30, which is basically a limit. It's a limit on my day. If I don't find at least one setup, I would just look from 11 till 12:30. And if I don't find a setup from 9:30 till 12:30, I'm off the day. So that's basically just like management. It's time management. It's a risk management. So I wouldn't take a trade, even if the move happens after that, because it's like, if you're waiting until like all the way till like 2 o'clock for the move, it's not worth it. So um that's basically what the lines represent. Like you could see 10, 11, 12, 30. This is my ideal range for my trade. This is like, okay, if I didn't find one trade, I'd wait until 12:30, and if I don't find one, I'm off the charts. And then 9:30 till 10 is like, it's like a risk. It's a risky, because there's a high volatility at this time, and my setup is kind of like, it doesn't really work from 9. It does work, but it doesn't work as well as 10 to 11. Like there's more fake outs, so I gotta be really sure of my setup for me to enter before 10. So, anyways, um, moving on to here. Usually, when I'm, you know, um, when I'm on the charts, I'm usually on the charts at 8:59. Like I'm 30 minutes before market open. I'm usually on the charts, so I would mark up the 4 hour. Hold up. I usually mark out the 4 hour high, which is the 6 p.m. candle. 6 a.m. candle. I'll mark out the last 4 hour previous high and previous low, and then I would mark out the equilibrium. So the average, like the middle between the high and the low. And the reason I do that is because um, it it basically shows me where market wants to go. So if it's above the equilibrium, there's a small chance of it reversing compared to being above a key high or key low, where it has a higher chance of reversing. I'll show you how I caught that. But yeah, my strategy is basically a play on a my version of the silver bullet from ICT. Like you can watch his video to understand that, but mine's basically just a play off of that, but with more my style. Um, so anyways, let's get to the trade. I mark out 4 hour previous highs and previous low, and we did have like this jump from this low. Um, I didn't pay too much attention to that. Uh, you know, when I got on the trade, I have this indicator. Uh, I suggest using it, but only use it if you actually know how to find your daily bias or your 4 hour bias or your 1 hour bias without an indicator, because it's not worth trusting this. I trust it because I know how to find my 4 hour bias and my daily bias and my 1 hour. I usually pay attention to the daily and 1 hour and the 4 hour, all three of them. So, anyways, um, I think the daily and the 4 hour and the 15 minute were, no, yeah, I'm pretty sure the daily 4 hour and 1 hour were bullish about right here. Um, and I was watching MNQ too. We'll get to here. I was watching MNQ, but basically, I do the same thing on MNQ. Like I mark out the previous high and previous low, and I just wait for it to get swept. So over here, um, on market open, it swept liquidity and the 4 hour previous low. So when it swept this, I was like, okay, if it doesn't keep going straight down, which it actually did, it cleared this low. So I just waited. After that, this is where my setup gets in. So basically, Usually, I wait for a sweep of the low, of a key low, or a high liquidity low, and after that happens, um, usually the market wants to go up. Now, I place a buy side liquidity, so like a a micro, uh, lower low, you could say, like this, just a low, close to the uh reversal candle. Um, I wait for that uptrend to sweep that buy side liquidity, and after that, that's like a minor confluence. I'll be like, okay, this has a chance of reversing, and then when it goes up, I wait for a break of structure. This is for bullish, a break of structure and a fair value gap to form after that break of structure, which it did, and I should have entered over here, but I didn't. I entered right here, and the reason I did that is this could also be considered a break of structure, but I didn't mark this as a break of structure because it's low key, like it could be a fake out. So I just waited for it to retrace on this candle. Once it retraced, I was like, okay, it didn't inverse it, so I would wait for the next one to at least tap into it, or like I was watching it, and it tapped into it in this case, but usually they don't, and I would just have entered off of this, but it came down, so I entered off of it. Um, I was also confident it would be bullish because all of my confluences was bullish, was pointing to the bullish direction, and it swept all the liquidity it could, besides like the slow. So I was like, it has to reverse at this point. Um, and it reversed. It went up. It went up. Created another fair value gap. Went up. Created another fair value gap. But it inversed that fair value gap. So I was kind of on the edge of my seat. I was like, okay, what's going on here? It might just keep going straight down because this is also my setup. Like I was watching it, I could see it in my head. It swept market open high, and then came down, swept sell side liquidity, and then break a structure, which is the IFVG. So if I took a short here, I would have been fucked. But my confluences wasn't saying short; it was saying bullish. So I went bullish, and I entered off of here. But anyways, it came down. Luckily, it inversed this fair value gap again, um, and it just ran up all the way and hit my TP. I usually I'm extremely consistent with my values of like TP and sell side liquidity. So my TP is about 20 points every time, which is like 80 ticks. And my stop loss is about 10 points or like 40 ticks. Um, I risk like 3 contracts, so since I'm trading MES, it would be like $150 to make 300, like 2 RR. So that's what I'm doing. Um, oh shit, I forgot to mention something. I forgot to mention that on market open there was a 4 hour fair value gap, a bearish fair value gap right here, and I took a risk going long. Like I kind of took a risk going long because I knew it was gonna go up into this fair value gap, and I took the risk. Like I bet against the market. I was like, you know what, I'm gonna catch the bull run up to the fair value gap, which was right here. And luckily it did, like it showed resistance. It showed high resistance right here. It started consolidating before it finally inversed. So it hit my TP though. So that was my first trade, plus 300 on that. And then I usually take 1 to 2 trades like 90% of the time I take one trade in the day, but this time I took two because like it was the easiest reversals to catch. So I was just like, you know what, let me just do it. Um, right here, you could see I was trying to find my setup. Like it would make like the 2/3 of my setup and then just invalidate it. So that's why like my strategy is so like consistent. It's because if all three sections hit, then 90% of the time your entry is going to be perfect and you're going to catch it's going to hit your TP. So basically right here, um since I knew it just entered a 4 hour fair value gap to the downside, I was like, okay, let me find my setup. So it swept buy side liquidity, which is like the high, and then came down, swept sell side liquidity. Um, there was a fair value gap right here. There's a fair value gap right here that it entered off of, but as it was going down, when it got to about right here, um, I had a market structure shift right here, and I was like, okay, if it closes and versus that fair value gap, then I'm gonna just enter off of that, cause um, but it didn't do that. It closed above it and went higher. And when that happens, I just kind of wait for it to just sweep the high again, because like you're showing momentum to go to the upside, and I might as well just wait because I'm in no rush. So um yeah, I just waited, and it went up, came back down, swept outside liquidity again, um and then it just shot up. Like I don't know what the fuck this was. um so once it just invalidated this whole setup, so I was like, okay, restart again, and I started watching the high again to be swept, and it got swept, came down, swept southside liquidity, and then um I went on the 3 minute. Like I usually alternate between the 1 minute, 2 minute, 3 minute, and 5 minute for fair value gaps when it's like this, because usually there's at least one fair value gap that gets put in, and I could just enter off of that if I see my setup. So I went to the 3 minute, and hold on, give me a fucking second. Where'd I enter off of? Okay, I can't go on the 2 minute, but I'm pretty sure this would have been a bigger fair value gap if I was on the 2 minute. It looks small. It would have been a bigger one on the 2 minute, but yeah, it swept my buy side liquidity, sell side liquidity, came down. This would have been a market, like a weak market structure shift, not very trustworthy. But I entered off of that anyways, because that's low key. That's where I would have entered if I was actually trading. So I did my whole discount price, and I entered off of the 0.6. I usually enter off 0.5 but the fair value gap was at 0.6, so I was like, you know what, whatever. I entered off of the 0.6, and right here, this would have been a valid entry for me, like a safer entry, because it would have still hit my TP, which is right about here. This fair value gap, this would have been a valid market structure shift right here. I marked it out as market structure shifts, and this would have been a valid one, and I could have entered off of this, but I didn't. I entered above it, and we ran down and hit TP. So, I mean, simple as that. To me, in my brain, that's simple shit. Like, it's so easy. Like, I look, I could, if I was actually trading this and I wanted to go for a third one, which I would never have gone for a third one. Okay. Let me see if there's been a move. Okay. I think this one's better. All right. So, say this was a setup. I was looking for a setup. This is sell side liquidity sweep right here. This is a sell side liquidity sweep. I could just like it just sweep the last low. So that's done. Then you wait. You wait for it to go up and clear buy side liquidity right here. This is buy side liquidity. Basically the micro high that it makes before the first bullish candle up. Sweep buy side liquidity. And then this would have been a market structure shift right here. And you would have these marked out beforehand. Like you wouldn't see any of this. You would just have the key levels marked out. So when it hits it, like for example here, made a fair value gap. Easy fair value gap done. Um, Boom, and then you would just enter off of this bearish candle. Of course, this is not a 20 point move, is it? I don't think it is a 20-point move. Hold up. Yeah, that's not a 20-point move. So it's more like a 10-point move. That's what the actual silver bullet strategy from ICT is. Where you're looking for like 10 to 15 points of movement for your TP. I go 20 because I catch like the bigger ones, but if I went 10, like all my TPs would be hit every time. I'm looking for 300 because I'm doing this for a eval, a 50k eval for Apex, and they have a $2,000 drawdown limit. So I'm just practicing for that, or else I'd be going like 15 points max. I wouldn't be risking, like I wouldn't be going for 20 points. But anyways, like there you go. That's my setup. That's like an A, almost A plus setup. Usually, like if it cleared, this is like this is like a B plus setup. An A plus setup would have been like sweeping the low off this candle and then jumping up from here, not going further down. But it did make an SMT, and then going up on this trend and making a fair value gap, entering, and then pew all the way up. Didn't do that, so yeah. But that's my whole strategy. Like it looks simple, but I messed up a bunch of times with this market structure shift and break of structure and MSS and sell side and buy side liquidity, got stuff mixed up. Got faked out multiple times because you can get easily faked out with this. Like for example, right here. Let me see if I can find a fake out. Right here, this could have been a fake out. Like it swept buy side liquidity, swept sell side liquidity. Where is it? But it didn't make a fair value gap. It made a fair value gap here, but it invalidated it. So, like when you look at the long 20-30 point moves, they're usually bigger fair value gaps. That's how you can tell it's a big move. Like where is it? Like this. Like when you see stuff like this where it's not tiny bearish candles, it's more elongated and more movement and energy to the downside. That's how you can tell that's a big move down. So yeah, that's it. So this is my first trade recap. Tomorrow's gonna be another one, and it's gonna be a daily thing. So I'm gonna be trading. I'm gonna be posting stuff on TikTok. Just posting my wins and stuff, and then maybe giving like a slight description of what happened and stuff like that. But other than that, like, I'm gonna be talking a lot on my YouTube channel and just explaining all this. I didn't even talk about MNQ, like, but usually, like, the only thing you need to know is, yeah, I marked out a bunch of fair value gaps. So basically, right here on this move up, I was watching MNQ, and usually I only watch it for sweeps of liquidity and fair value gaps, because if it makes a fair value gap on MNQ and it doesn't, it makes a smaller one on here, usually MNQ is gonna move S&P better, like, more, and that fair value gap is basically valid. So even if it's a smaller fair value gap, like over here, hold up, on my entry, right here, wait, right where, yeah, right there, let me find it, where was that, 1034, 1034, 1054, on this one, right here, look, it made a fair value gap here, but it didn't make it on MES. So I would have probably trusted this and just entered, because look at it, like, they both move the same way. There's no point. So I caught both big moves today. First trade recap. I know it sucks. It's not planned. I'm just speaking. There's no script. I'm just telling you what was going on in my head. That's why there's so many back and forth, because there's a bunch of stuff I was thinking about. But yeah. Hope you enjoyed. At some point, I'll give a more clear, in-depth, like, video that's descriptive about my strategy. Doesn't have a name yet, except, like, unless you want to call it the silver bullet, but I don't want to call it that shit, because it's a little different than that. I mean, it uses like 80% of the same concepts, but the other 20% is tailored to me. So I might find a name for it later. But for now, I'm gonna just say it's my strategy, and I'll go in depth maybe another video where I have time, and clearly explain, like, 4-hour highs and 4-hour lows and sweeps of key liquidity areas and fair value gaps and inverse fair value gaps and market structure shifts, breakup structure, the discount, where if you've watched TJR, like, that's the one thing I like, where I got this discount thing, because it's just honestly, like, quality of life. And SMTs, I have an SMT indicator, and it hasn't failed me. So it made I think SMT, bullish SMT right here. That's why I like sweeping, because one of, like, main ideas about it sweeping kilos is traps, like buyers or sellers. Like, it's basically a fake out. That's all it is. First video. I don't know how many times I'm gonna say this, but it's a first video. It sucks. I know it sucks. Tomorrow's gonna be better, because I'm gonna be well prepared. This is just, introductory. Like, I did this trade, this is what happened, blah 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 blah. So, good luck on your trades, and just don't quit, because I almost quit like 50 times doing this shit before I found my strategy. Like, I was trying everything, so just don't quit. And it'll work out. Yeah. Peace.